Good morning and welcome to our Apartment Owners Educational Webinar. I'd like to say hello to our personal clients who are tuning in. Hello to those of you who were scheduled to be a live educational luncheon. And hello to those of you that I'm just making your acquaintance for the first time. Needless to say, over the last week, the globe, here nationally, we're in the middle of a crisis. You have a situation where the stock market has fallen by more than 30%. The government has announced a quantitative easing program, the likes of which we have not seen since the 2000 financial collapse. And the state of California, 2 days ago, announced a statewide moratorium on evictions for 90 days. The question is, the question that's on your mind, the question that's on my mind, and on the minds of the speakers involved today, is what does that mean to us personally? What does that mean to our real estate portfolios? What does that mean to our cash flow in the days and weeks ahead? Now, originally this was slated to be a live educational forum. Over the last decade now, we've been educating landlords on what is the news of the day. And to be honest, if you would have asked me even as late as a month ago, what was going to be the overarching banner for this event, it was rent control, because rent control had gone into effect statewide January 1st. Now that's changed. So over the course of the last 72 hours, myself, my staff, and the speakers involved reformulated the content to be shared with you to address the concerns that all landlords have. When you have a mix of tenants who will be out of work and who have protection of no eviction, what will that mean to us? Will our lenders be as forgiving? I'll also let you know that I am in no way associated with AOA or another apartment affiliation. This is something that my team, we do independent, and initially we created this event in 2008 to serve our personal clients. At that time, we were in the middle of the financial collapse, and this event was birthed from that. Being cognizant that my clients needed information amidst all the hysteria, I brought together who I perceived to be the brightest minds in their individual fields, whether that was real estate law, taxation, market forecasting, to advise our clients how to make decisions based upon fact versus the emotion that was in the marketplace. If you take yourself back to 2008, emotions ran so high that the media suggested that there would be bread lines and soup lines, similar to the Great Depression. Well, if you've been to the supermarket here lately, I was there yesterday morning. Bread aisle is sparse. Canned food items, next to none. It's eerie how close the times of today replicate what we saw back then. What I also want to share at the outset is this too shall pass. If you look at the run-up in multifamily values and rental rates from 2008 to 2017, you had values double in some locations, rental rates double in some locations. So this too shall pass. And when it does, we want to be prepared with the right information to be able to strike when opportunity presents itself. Now, in terms of the individuals who you'll see over the course of this morning and this afternoon, I have brought together an ensemble of individuals who are pinnacles within their own individual industries. Individuals who they themselves are landlords. They themselves who can sympathize with the concerns and your anxiety you currently have as a landlord. Now, in terms of my experience, I've worked with clients over the last 14 years who own everything from a duplex to say 2,000 units, truthfully that much, and everyone in between. And what I've been able to identify are patterns amongst those who are the most successful and those maybe who didn't reach those heights. And really what investors are doing, whether we acknowledge it or not or would call it as such, we're building a financial legacy. Through the investment of multifamily properties, we're building our personal legacies and the legacy of our heirs. This legacy is hinged on 3 pillars. The edifice of this legacy is 3 pillars. Those 3 pillars first start with maximization. And in a normal setting, maximization, when we educate our clients, would be routes and strategies how to lift your rents from their current values to, say, market rate. But I also understand that given the tone of today, when we hear market rents, you're maybe just concerned with, will I be able to collect current rates? But when the dust settles, we want to have the information necessary to build the value of our properties from within, and income property hinges on the income that they collect. As we walk investors through the strategies and techniques to maximize Pillar 1, their current investments, they then are poised to move to Pillar 2. Pillar 2 being growth. Now, again, having worked with several hundred multifamily investors, you find that there's really 3 investors out there, and you, as you watch today, are, I assume, one of the 3, or there's a strong chance you're one of the 3. There's those of you who rely on your multifamily properties as the vast majority of your retirement income. So when you hear that your tenants may be out of work, you have concern because that's a direct hit to your standard of living, and rightfully so. But any movement in growth for yourself, maybe not today, but in the months ahead, will mean a direct correlation to the increase in your standard of living. Then there's those of you who are part-time landlords. You work by day, either are fully employed or run a business like myself and my wife, and you're a landlord by night. You look at your multifamily investments that they will provide the vast majority of your retirement income down the road. Maybe now, depending upon your business or your line of employment, you're going to rely more on your rental rates. So growth in terms of the amount of real estate that you add to your portfolio will not only impact your living today, it'll be that much more meaningful to your standard of living sometime down the road. And then there's those of you who are just concerned with your heirs. You're in a good spot, but you understand that your children, your grandchildren are going to need more money in their lifetime than you've needed in yours to create the same type of financial living. Case in point, if we go back to the 2008 financial crisis, coming out of that, companies learned how to run leaner. Technology entered the marketplace that at one time did not exist. So your children or grandchildren who were graduating from college had a tough time finding a job in the workforce. They had to cohabitate with multiple roommates, or they had to stay living at home longer than any generation prior to them. So for you, any growth in terms of portfolio size and income and so forth means a dramatic change in their financial trajectory, their financial legacy down the road. And then the third pillar of our legacy is preparing for tomorrow. For some of you, that means either by choice or by circumstance, having to consider who will manage your properties on your behalf. It takes into account estate planning. How do your heirs take over your estate without it being a taxation nightmare and without siblings becoming embattled with each other over your assets? Others of you, you had already had some idea of exiting real estate. Maybe that wasn't for another year or two, but given the recent financial calamity, that's sped up that decision. But you, like every other investor, will have to tackle with capital gains. And so you're concerned with how do you mitigate that? How do you not give up 30, 40, 50% of your hard-earned equity? And we will discuss those strategies over the course of this afternoon. What I want you to consider is that while we go over the course of this morning and this afternoon, the information that's covered from the panel and speakers involved, which pillar are you in? Or which pillar should you be in? Maximizing what we currently own, growing our portfolio, preparing for our exit or for the next generation, and really take the information in through that lens. Let's clear out for the next few hours here the anxiety, the negativity. This is not going to be the 3-hour coronavirus seminar. This is about preserving, building our financial legacies. And the speakers that I brought in have, again, spent the last 72 hours transitioning, pivoting from what was to be a live event, primarily geared towards rent control, to now, to the best of their ability, with the news at hand, to giving you information that will empower you so that you can get a solid footing amongst the rocky waters, and so that you don't have to take your gaze off of the building of your financial legacy, and you don't get stuck in the mire of what is right now a negative situation for all of us. So I am excited for the information that we look to cover this afternoon. The panel of speakers that we have is second to none. I have Dennis Block. Dennis Block has been involved in more than 200,000 plus tenant evictions. He's a pinnacle within the industry. So when there's a moratorium on evictions, when rent control becomes law at the first of the year, as tenant-landlord relations become a little more difficult over the coming weeks, you need the advice from someone like Dennis. We have Stephen Hall. Stephen Hall and his family for the last 4 decades as tax advisors have worked with individuals of average net worth to high net worth. And the real question to ask here is, if the rich get richer, let's not ask why, let's ask how. And Steve will be sharing with us not only how to take advantage of the current tax code as it is, but the last 48 hours, he's poured through the proposed tax changes that Trump will begin to initiate in the coming days, and how is that meaningful to you as a multifamily investor. We'll have with us Bruce Norris. Bruce, for the last 4 decades as a market forecaster and investor, has been able to predict whether a market was going to tick up or whether a market was going to tick down. And as late as the fall of last year at our last educational event, called for a systemic event. And Bruce couldn't have guessed at that time that it would be a virus, but he called that there would be a systemic event. He called for 0% interest rates. And as late as 2 weeks ago, he thought that the stock market might go to 20,000. Why? Why did he feel this way? He'll be joining us later today to share his thoughts on where we are currently, where he feels the real estate market will go in the near future. And then we have with us Stephen Spierer. Stephen Spierer, for 4 decades now, has represented landlords like yourself and myself in and outside the courtroom in the most difficult of situations between you and your tenants, when you're being directly sued by your tenants for any number of reasons. And Steve is going to be with us to take your questions, as will the panel. And this is a good point now to interject that you can submit your questions via text. You should see there on your page how to text us questions directly. And Stephen Spierer will be taking those live on the air so we can address your real estate legal questions. And then we have with us, who's up next, is Mr. Gil Figueroa. Gil, for the last 3 decades, has been involved in the capital markets. And I didn't want to trout somebody out here from Wells Fargo or one of these financial institutions, nothing against them, but just to read you a rate sheet. No one needs to be told that rates have gone down over the last week. But Gil, being involved in the stock market, bond market, every capital market, and who, interestingly enough, at our last 3 educational events was able to pinpoint small trajectories in rates going up and rates going down, is here to share with us what does he see now, what do you need to be cognizant of, and I would listen closely because, again, in 2 years running straight, he's been accurate every time.